Friday, 28 August 2026. 3 Asia-Pacific AI stories before your first coffee. Seoul's Hyundai motor used its investor day to recast itself as an AI infrastructure and robotics company, announcing a 100 megawatt AI data center at Sangam on Korea's west coast that will house more than 50,000 GPUs when it comes online from 2029. The plan pairs Korean compute with a US robotics build-out. Boston Dynamics Atlas humanoid deploys at Hyundai's Georgia Meta plant in 2028. The same year, a 30,000 unit annual robot production line starts stateside. Robotaxi deliveries to Waymo begin as early as Q4 2026, built on the Ioniq 5 platform, and the company lifted its 2030 operating margin target above 9%. Why it matters? Hyundai is stacking 3 capital-intensive bets: Korean AI compute, humanoid manufacturing, and autonomous vehicle supply into a single corporate thesis, which means its margin story now depends on AI infrastructure utilization as much as car sales. Builders in Korea's data center ecosystem should watch Sangam closely. A 100 megawatt anchor tenant reshapes power planning and talent pipelines on the West Coast. The decision to standardize sensor specs across Hyundai, Kia, 42dot, and Motional creates a shared autonomous driving data pool that could accelerate model training, but also concentrates data governance risk in one table. Capital allocators pricing Hyundai as an automaker will need to revisit their models, and Korean regulators face new questions about compute permitting timelines and energy allocation for GPU clusters at that scale. So, Asia's ceramic capacitor makers are running out of the tiny components that every AI server needs. UBS Evidence Lab data shows global distributor inventory of multi-layer ceramic capacitors, or MLCCs, fell roughly 8% in the 4 weeks to 9 August, hitting a record low. Samsung Electromechanics, Murata, and Yageo held zero stock of certain high-capacitance server parts by mid-August, with restocking not expected until November 2026 to January 2027. Every significant producer sits in Japan, South Korea, Taiwan, or China, making this an almost entirely Asian supply chain event. Why it matters? A component that costs a fraction of a cent is now gating AI server delivery timelines. Samsung Electromechanics raised MLCC prices 30% from 1 August, and Taiyo Yuden followed with its own increase effective 1 September. High-spec lead times already run 15 to 20 weeks, with some lines stretching toward 40 weeks on distributor data. Hyperscalers and server OEMs planning rack deployments into 2027 need to lock supply now or face slippage. Capital allocators should watch margin expansion at the big 4 MLCC producers, while builders relying on off-the-shelf server hardware may find delivery windows quietly sliding. The second-order effect worth tracking: whether this bottleneck accelerates direct procurement deals between cloud providers and MLCC fabs, bypassing distributors entirely. Now, open-weight models from Chinese labs now command a record share of token volume on Vercel's AI Gateway, a major Western developer platform. 4 of the top 5 most used models by token volume came from Chinese labs, led by DeepSeek V4 Flash, which artificial analysis prices at roughly US $0.003 per benchmark test, compared to US $3.16 for the leading Western closed system. Open-weight models hit 62% of token volume on Saturday, up from 28% on 24 June, a swing that signals a structural shift in how Western builders choose inference providers. Why it matters? The cost gap is now so wide that Western developers are defaulting to Chinese open-weight models for production workloads, and the downstream deals are following. Moonshot AI is in early talks with Microsoft, Amazon, and Google to host its Kimi K3 model under a revenue share worth up to 30% of related revenue, effectively embedding Chinese-based models inside Western hyperscaler stacks. OpenAI-backed legal tech firm Harvey has already post-trained its first in-house model, Harvey Tenet, on the open-weight Kimi K3 base. Capital allocators backing closed model providers need to watch unit economics closely. If the price per benchmark test stays 2 orders of magnitude cheaper on the open-weight side, enterprise procurement will keep tilting toward Chinese foundations regardless of geopolitical rhetoric. That is your AI in Asia briefing for today. Stay sharp, build well, see you tomorrow.